What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SoFi stock. I want to say happy 4th of July to everyone out there. I know the SoFi investor community has been really feeling the pain the past couple of years. I truly believe that things will turn around. So enjoy yourself today, or after you've seen this video, do something fun, go hang out with your friends, have a beer, go to the beach, watch some fireworks, just have a great time and relax and just take the time to separate yourself from the stock market. Eventually, good things are going to happen for SoFi. I believe we are heading that way with this next upcoming earnings Q2. I think the story is really going to, play out of what SoFi wants to accomplish in the back half of 2024. We all know that SoFi has to put up some crazy numbers, to get this growth back on track, for these upcoming earnings projections that they're putting out for 2026. And I think they got something up their sleeve for 2024 back into the year. But I'm telling you right now, I can tell you exactly why the SoFi stock is continuing to struggle. And I'm going to tell you why I believe this valuation continues to get, compressed from Wall Street. I truly believe, guys, they are waiting till everything across the board is beyond great, beyond perfect. Okay. When you see, these good earnings come out, there's always something to nitpick. There's debt, there's Galileo, there's, lending risks, defaults. Okay. Everything, is getting nitpicked on SoFi every single quarter. Everything has to come together perfectly across the board. And I believe SoFi is going to be doing that soon. Okay. It may not be, this Q2, but it may be, a Q3, Q4 where everything, just comes together. We know that SoFi, their, tech platform Galileo, they've been in a transition stage on that for years, and they are looking to land larger, durable clients, legacy banks, top 10 that can handle, these, more difficult times with interest rates higher, because you're seeing the fintech market completely dried up. That was where Galileo was getting a lot of its revenue from, these upcoming startups, fintechs, just revenue blasting out of the sky, all of them unprofitable. But now they want larger, durable clients. And guys, in my opinion, I want to be holding SoFi stock once Galileo potentially lands, two out of the top 10 legacy banks in America onto that, Galileo tech platform. And that's when you're going to see, revenue skyrocket to, my guess would be 40 to 70% range if they bring on two massive legacy banks with, revenue in the 10 to $50 billion range. Okay. That's what we're waiting on. Okay. We only need one, to be honest. You only need one out of the top 10 to really see Galileo get that super SaaS, banking as a service premium. And you're just waiting on, that one, bank to land on the platform. Okay. They might have already landed one and they could be in their, transition stage for 9 months, getting them onto the platform. Okay. That's what you're waiting for. Okay. And once again, we're going to go into detail, but I believe that's a big reason why SoFi is compressed right now, the stock, the valuation from Wall Street. But, we're going to cover some good things in this video. If you find any of this information useful, be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. Once again, be sure to click the link in my comment section and you will see, you can sign up for a SoFi checking account, get that direct deposit, and get that 4.6 APY interest, and you'll start growing your cash on autopilot, guys. It's one of the, top interest, banks in America. And I use it currently right now and I'm loving it. Let's get into the video. All right, guys, I want to cover this real quick. This is a post I put out on my X platform, Twitter, a couple of days ago. But take a look, guys. One thing that, a big bonus that SoFi has seen since they got that banking license is they are able to use those direct deposits for lending. And that has just grown their bottom line because they haven't had to rely on all this borrowed money from these other, institutions. And we're also going to talk about, debt, guys. So take a look. Deposits, we're going to be talking about in that stomach turning 6.4 billion debt SoFi had last year. And a lot of people were calling me out on that. I told, everyone is going to go down because it's just borrowed money. And that's exactly what we're seeing happen right now. So, guys, take a look at this. Q4 2022, deposits were $7.3 billion. Fast forward a couple quarters later, guys, Q1 2024, $21.6 billion deposits. That's a 5-quarter difference, just a little bit over a year. Plus 14.3 billion change in deposits, averaging 2.8 billion per quarter gain. 2-year change. I'm doing a forecast, guys, on what I think is going to happen if we just follow the trend. Looking at 7.3 billion Q4 2022 to a jump Q4 2024, $30 billion in deposits, guys. That's just 2 years. Imagine if this story goes on after 2024 for an additional, 5 years or so. You're going to be in that 100 billion plus range in deposits. That's like top 30 in America, I believe. Let's take a look real quick just to see, what would happen. So you can see here, this is the top 250 banks total deposits 2023. If we just scroll down, of course, we got the big legacy banks, 190 million, 160 million, 140, 101. Okay, right here, I got Discover Bank 30 is the rank at 94 billion. So we would be ranked, in the top 30, and there's 4,000 plus, banks out there, credit unions, legacy banks, 4,000 different banks. That'll put us in the top 30 and potentially, the next 5 years or so, guys. This is insane growth. SoFi's only been around for about 15 years, and this trend is not slowing down at all. Now, these deposits, guys, are going to come right back over to debt, which everyone's always concerned about debt. But, guys, the debt is going down. It's going down fast. This deposit jump funding loans in-house from the user base would most certainly wipe out SoFi's last bit of warehouse facilities and credit facilities. That's the borrowed money to fund loans that they've been using for the past, 4 years or so as a public company. That's why you've seen the debt so high. We've seen the debt as high as 6.4 billion total with these warehouse facilities maxed out a couple of quarters ago. The deposit growth would potentially bring SoFi's debt down to around $1.6 billion. That's a massive 4.8 billion decline in 6 quarters, guys. So the debt would go from 6.4 billion Q2 2023 to potentially another projection Q4 2024 debt 1.6 billion, okay? That is a massive cleanup on the balance sheet, guys, and that's what we're waiting for. We want to continue to see this deposit growth of 7.3 billion to 30 billion in as little as 2 years. So guys, these deposits are helping SoFi out in a dramatic amount of ways. You're talking, bottom line profitability, debt decreasing from borrowed money, guys. The list goes on. And these things are not, coming years in and years out, guys. We're talking 6 months away from seeing these two types of numbers, okay? Just, it's a matter of time before the story changes and the sentiment starts to shift, guys. Once again, I believe everything has to be perfect across the board, and that's why we're going to jump over to the Galileo tech platform side, because right now we are struggling to get that SaaS and banking as a service multiple, and it's just going to take one massive client when you're talking about a top 10 legacy bank to turn that entire story around and start the digital shift to becoming the AWS of fintech. So guys, take a look, guys, right here. This is Galileo. I have taken all 3 years, we've got on the, investor presentations on the earnings, guys, and just looking at all the revenue, guys. We know revenue is one of the most important things from a company, because without revenue, you really got nothing. You don't even have a company. So you got to start on revenue and then you start on bottom line. The good news is Galileo is already, profitable on a contribution metric. So guys, take a look. We got the last 12 quarters, okay? Just take a look at the growth, guys, and you will see where the problems lie. And this is why we're not getting that crazy SaaS multiple valuation, guys. 46 million starting Q1 2021, 45, that's a decline. Nice little jump here to Q3 2021, 50 million. A little bit of an incline, 53 million. Nice little jump, 60 million. And then we got that big jump, 23 million. That was that Technisys revenue boost, that acquisition from Technisys, okay? So this is what we want to see, $20, $25 million jumps. The problem is, since they, integrated Technisys, you still haven't seen that, okay? 84, 85, just $1 million jumps. And then we had an $8 million decline right here. We lost our large client Current, bringing us back down to 77 million. And then you saw a nice little bounce back right here, $10 million back to 87. You saw the slowdown again to 89. Then you saw a nice little jump once again, $7 million jump to 96, and then another pullback. So guys, you can see right here where the problems are for our, tech multiple hybrid valuation. It's right here in front of your eyes. This is not what you want to see for SaaS or banking as a service multiple, okay? The growth is just not there, okay? We've seen, $7 to $10 million jumps before, but we need to continuously see, $20 to $40 million jumps, okay? That's what I'm waiting for, and you're going to need that, and you're going to get that from getting, 1 to 2 legacy banks. We just need one top 10, and then we could potentially get 2 of the top 10s, okay? And these guys are on way outdated technology, okay? So maybe SoFi, we know they've, been in, testing and, you know, client talks with some of these legacy banks, but we need to land one, okay? Maybe they have landed one and they're integrating. We don't know, but guys, once again, just look at the numbers. The numbers are not there, okay? I'm bullish on SoFi, they're growing members, but this is the tech platform, okay? And it's not there, and it's not giving us that boost and multiple that we want to see, okay? So my thoughts, the high growth is not there yet. Does not deserve a super SaaS multiple. When I'm talking SaaS multiple, you keep it real simple, guys. You go off price of sales and you get into the 10x to 20x range, okay? Right now, you take the multiple, let's say 400 million revenue, you put it at a 3 to 4, you're valuing Galileo at a 1.2 to 1.6 valuation or something like that, okay? What do I think gets us there, okay? It's simple. Massive quarter over quarter jumps in revenue, second grade stuff. That is going to get your multiple. That's what Wall Street wants to see. I'm thinking 20 to 40 million dollar range, okay? We've seen them jump 10 million before, right here they made a $10 million jump, right here they made an $8 million jump, okay? We need to see 20 to 40 million dollar range jumps. Maybe we get that by Q3, Q4. Maybe we see a $20 million jump. Guys, I would be blown the away, okay? So for 3 years of earnings, what you're looking at right here, I give this a C minus, okay? They're growing. There's nice little jumps here and there. There's pullbacks. There's pauses. I give it a C minus, okay? We want an A plus. To get to an A plus, you want to see right here. Next quarter, 114 million, okay? Quarter after that, 144 million. That's a 30 million jump, okay? This is what you need to see, okay? When is it going to happen? I don't know. But, if this still continues to pause, SoFi as a bank, could get SoFi stock moving a little bit if we see members, for the banking platform, skyrocket to 800,000 to 1 million members per quarter. You continue to see EBITDA, jump up to the $200 million range. You see profitability increase. That could also get the stock moving. But I'm saying, once again, for Wall Street to green light this stock, I mean green light it, like a Palantir and like a Robinhood. But understand, SoFi isn't the only company out there that's getting screwed. You're also putting the same basket on, SoFi, PayPal, Block. Those are kind of in the same basket as well. 3 stocks that retail really likes. So every stock is not just absolutely mooning, but if you want this thing to get green lighted, everything needs to go at the same time. The banking service, the Galileo tech platform, everything's got to go at the same time. Profitability increase, guidance increase, revenue increase, Galileo $20 million jumps. That is what you need. This is 20% of our overall business right now, and it's not there yet, guys. I give this a C minus. If you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing these videos for you. Once again, I want to say I hope everyone has a happy 4th of July. Take some time away from the stock market. Have a great time. Once again, my name is Kyle. Hope you have a great day.